afternoon, or good morning, depending on where you all are joining us from, and welcome to our first webinar of the year on the topic of Financial Wellness 2020, the future of FinTech, wellness, and employer intervention. My name is Lacey with Morningstar, and I'll be your moderator today. I'm also joined by our financial wellness expert, Andrew Lendnal, who will be your speaker today. In this presentation, Andrew will focus on the wellness landscape. He'll spend a bit of time on its history and definitions, but more importantly, discuss trends of where we're headed. He'll also discuss developments in FinTech and how these are impacting not just consumer products in our lives outside of work, but also employee benefits. For more information on your speaker, Andrew Lendnal is Morningstar's Vice President of Financial Wellness, who joined us by way of HelloWallet's acquisition. So he has extensive experience on today's topics. You'll also hear this in his accent, but it's worth noting that Andrew is from New Zealand and previously worked in various senior management positions at Grosvenor Financial Services. With more than 17 years of experience in the financial services industry, he's passionate about helping people achieve better financial outcomes. Andrew is also an author and has published 6 books on budgeting, financial guidance, and teaching children about money management. And before passing it over to Andrew, I do want to take care of a couple of quick housekeeping items. Firstly, today's recording will be available shortly. These generally take us about 3 business days to turn around, so look out for it early next week. We'll also have a blog recap available immediately after today's presentation. So if you stick around, the screen will be rerouted to the blog recap immediately following today's presentation. Also, if you have questions, feel free to type them directly into the chat box. All of the participants are on mute, but you've got full range to type in questions, and please feel free to do so. We'll be sure to answer those if we are able during the presentation, but we'll also save room at the end for Q&A. With that, just a little bit about Morningstar as well. You might know Morningstar is an independent investment research firm. We represent the workplace group within Morningstar, which strives to put employees on the path to financial freedom and security. So in addition to this independent financial research that we put out on retirement plans, etc., we've got a suite of solutions to help employees achieve financial wellness today and also get ready to retire when the time comes. We'd be happy to talk to you about Morningstar following the presentation if you have any questions. I'm sure Andrew will leave you with his email address at the end. But more importantly, let's dive into today's topics. Passing it over to you, Andrew.
Great. Thank you, Lacey. Good morning, good afternoon, wherever you may be today. Thank you for joining us in relation to this very exciting topic. Financial wellness and the FinTech industry is evolving very quickly, and we're learning a lot day in, day out. And I would like to share all of this experience that we are collecting in our day-to-day jobs. So thank you for taking the next hour or so to listen to me and to ask questions that you may have in relation to this interesting topic. To ensure that my passions are kept under control, I've put an agenda together for today, just writing off what Lacey previously said. I want to set the tone in relation to the industry. It's a fairly new topic. It's a fairly new industry when it comes to financial wellness. So I want to start the conversation on what financial wellness is and what we here at HelloWallet believe it is. Then I want to move into the rise of FinTech. HelloWallet, as you may know, was a startup. It was acquired eventually by Morningstar in 2014. So we know a lot about the startup world and the FinTech space, and we know a lot about its integration of startups within providers and corporations such as Morningstar. So I want to talk about the rise of FinTech. I want to touch on who's using new technology in this personal financial space. I want to talk about what is this new technology, how it's being used, and then also want to touch on what's working, what's not working, and what's still to come in this space. So thank you very much once again for joining, and I'm about to get into my first slide, which is what is financial wellness. So really here at HelloWallet, we define financial wellness in 2 parts. For employees, it's defined by health, not necessarily by overall wealth. And we include spending, emergency savings, debt management. Then later on, we focus on benefits and investments in some of the more longer-term vehicles. One thing that we found is that it's important to focus on foundational needs such as spending accounts and savings accounts, and then people are much more successful in their long-term benefits, and they start utilizing those benefits a lot better. So at HelloWallet, we use a ladder as an analogy to show that. And so regardless whether you earn $25,000 a year, whether you earn $250,000 a year, if you spend more than you earn, you're not financially healthy. You may have a 401k balance, but if you're holding on to that revolving credit card debt, then you as the individual may not be financially healthy either. The other part of the definition is for employers. We've defined it as a program or a set of programs designed to improve an employee's financial behaviour as well as those outcomes that I mentioned earlier, but at the same time providing some tangible business impact, some ROI or a proof point for your business. So over the last couple of years that I've been working in this space, employers are telling us that they are adopting financial wellness programs to either improve efficacy of their existing benefit investments. Some are wanting to drive stronger alignment between the benefit spend and the needs of their company and their workforce. Others are looking at reducing human capital costs, whilst others are looking at strengthening the business impact of compensation and benefits. While still a young market, though, most employers, and large employers in particular, now are indicating that they have or will be adopting a financial wellness program. So we're really excited to hear those statistics. So where did this financial wellness industry or market come out of? Well, really nowhere. Looking at Google Trends, and originally when Hello Wallet commenced, there was no definition for financial wellness. In essence, Hello Wallet wrote the first definition for financial wellness. But when we look at Google Trends today, which lets you see how popular a search term is, the term financial wellness wasn't even on the radar until around 2008. Since then, however, it's been steadily climbing in popularity, likely ascending in tandem with the frequency of financial wellness programs offered by employers. So why did it become such a buzzword to employers? Well, because studies show that health and financial wellness are very closely linked. And from there, it becomes a bit like dominoes. Employers want fiscally responsible employees. Meanwhile, as the job market loosens up, employees have greater choices about where to work, and a workplace financial wellness program is a solid investment. However, little is understood about this market. So here at Hello Wallet, if you haven't already downloaded our white paper, we decided to actually write a white paper to help. We called it Financial Wellness, the Future of Work. So it's available on our hellowallet.com website if you'd like to take a closer look. But what we had to focus on, and this slide illustrates the key questions that employers and the market participants have, we needed to look at the evolution and the efficacy of financial wellness programs in America. When Hello Wallet was first founded, financial wellness was just a concept that policy geeks discussed. Pardon the humour. Since then, it has quickly become one of the most frequently cited priorities for US benefit leaders. This was indicated by some recent research. You may have seen the Aon studies over the last few years, which shows around 90% of companies planning to invest in financial wellness programs beyond just retirement decisions and retirement strategies. Nonetheless, financial wellness is still a very new market, and broad questions still remain. So this paper, if you have time to download it, we've attempted to answer many of the questions in front of you here today about the origins and efficacy of financial wellness programs, including why are companies adopting this new benefit approach? What constitutes a financial wellness program? What is the efficacy of an investment in financial wellness? Financial wellness programs come in many shapes and sizes and can be tough to choose between. And I know you've probably been asking yourselves on a daily basis, do your employees need software? Do they need access to financial advisors? Should we provide them with education? And as I mentioned, as so many more companies expand to focus their financial wellness programs in 2017, developing the right program can be complex. So make sure you turn to our research section of our website, where we've got a lot of strategies, a lot of tools in relation to evaluating the appropriate program for your needs and how to go about implementing a financial wellness program at your place of employment. So now let's move to FinTech. So Hello Wallet was a FinTech startup. But, what is it? And this diagram in front of you is, well, I'm hoping it is, trying to make sense of a FinTech startup ecosystem. At this time, I'm tracking over 2,000 FinTech companies, around 1,200 of them funded, across 16 categories in 59 countries with a combined funding amount in excess of $57 billion. These are relatively new companies that either serve existing pieces of the financial system or develop alternatives to those pieces. And as you can see on the slide, the categories are defined, and we can provide you more information about these markets after this webinar. But what is FinTech? Financial technology. Nowadays better known under the term FinTech, it describes businesses that leverage new technology to create new and better financial services, both in B2C and B2B. Today, FinTech companies directly compete with banks in most areas of the financial sector to sell financial services and solutions to customers. Mostly due to regulatory reasons and their internal structures, banks, however, still struggle to keep up with FinTech startups in terms of innovation speed. FinTechs have realized early that financial services of all kinds, including money transfer, lending, investing, payments, need to seamlessly integrate in the lives of the tech-savvy and sophisticated customers of today to stay relevant in a world where business and private life become increasingly digitalized. Especially millennials, born between approximately the early 80s and late 90s, and the following generations prefer quick, easy banking services over walking to a branch, appointments with banking consultants, lengthy process of setting up accounts or putting together a portfolio. So now let's look at the rise of the FinTech revolution. Where did this market come from? People working in financial services thought that complex laws and heavy regulations could prevent the internet from eating away at their businesses. Came the dot-com bubble bust. There were only a few of the startups growing in the financial industry at that time. Banks weren't worried, so they took their time to embrace the change of a paradigm that the internet had brought. Traditional institutions did not anticipate that the good mix of timing, FinTech ideas, new technology, as well as more demanding customers, agile strategies, and talent would lead to the current FinTech revolution. And the same process of disruption is happening in the asset management sector today that we'll touch on shortly. So, the 5 key areas that led to the rise: good timing. The crisis of 2008 defined a new era for finance. It emphasized the inefficiency of banking and financial systems. The tech industry did not need more to understand that the financial world was broken. This means enormous opportunities for the startups that could improve the elements of the whole system. So, tech founders began to imagine how to disrupt the financial services traditional models that banks provided. They also took advantage from a positive ecosystem that made it easier to start a company. Secondly, opportunities and ideas in FinTech. Disruptive innovations were easy to find. Customers have had many reasons to lose trust in their banks, whether it be high costs, slowness, lack of transparency, lack of good user experience, no great mobile apps, bad customer service, and above all, a major crisis. Thirdly, new kinds of customers for FinTech businesses. So as we're all seeing, a demographic shift, not only with customers but with employees, emphasize new expectations from financial services. The new customers don't want to comply with existing rules. They want to manage their money on their term. In B2C, digital natives prefer to manage their money directly. They don't want to go to a branch for that. This digitization of financial services also impacts the marketing strategy of financial services. It therefore makes it more accessible, quicker, and easier to compare offers. Whilst in the B2B space, financial services have to catch up too. Since B2C customers have higher expectations, there's no reason why they won't have the same expectations at work. Fourth, agility of FinTech. And this is one thing we experience a lot of here at Morningstar Hello Wallet. Startups have benefited from a supportive business ecosystem. It has never been cheaper to start a company, and the biggest investment for these tech companies isn't technology anymore, it's talent. Agility is key. FinTech startups are attacking an aging industry with more agile companies. And last but not least, talented designers, software engineers, they all want to work in the FinTech space. Tech companies have been highly popular among talented young people, designers, software engineers, and product managers. They offer a better place to work, and FinTech entrepreneurs open appealing alternatives to the more so-called boring corporate world that they may have worked majority of their careers. So, facing competition, traditional financial institutions have to react. They have to cope with two big problems. They notice a FinTech revolution too late, or they're too big to change. So now let's get into the weeds. Who is using this new technology? In a recent survey, the 2016 Prosper Marketplace Financial Wellness Survey, the vast majority of Americans, 84%, feel more in control of their financial situation when using their technologies. The majority of respondents use between 1 and 3 applications to manage their financial lives, and the majority who are using financial apps, 69% of them, do so at least a few times a week, and more than 1/3 use financial apps at least once per day. Additionally, the survey asked respondents about a range of popular financial apps and what they're using them for. Investing apps proved to be especially popular. Among males, only 29% of women who were using apps to do investing, was 51% of males. And we saw a huge increase in usage and adoption of financial technology in 2016, which showed a growth of 18% of people who were not currently using online apps or sites for finances said that they would somewhat in the future, and that was reported in this survey. And we really can't wait to see how this result changes in 2017. Then who's adopting it? Who's engaging with these types of apps? It's predominantly a young, urban, and valuable audience. Early FinTech adopters tend to be younger. They have higher income with adoption concentrated in high development urban areas, whether it be the likes of New York or internationally, Hong Kong, London, etc. These users are some of banking and insurance companies' most valuable customers, and traditional providers must reconsider the way that they meet these users' needs if they want to really stem the flight to FinTech. This will require reevaluating their multi-channel strategies as well as exploring partnerships with FinTech providers. And that was one experience that Morningstar had when they acquired Hello Wallet. Morningstar has been typically an investment research giant informed by data focusing on the top rungs of a financial wellness ladder in the investment and retirement space. It identified the importance of being able to attract cross-generations, and where Hello Wallet focuses on budgeting, debt management, on emergency savings to help propel employees up the economic ladder to those retirement and investment decisions at the top of the ladder. It was a beautiful relationship which has integrated successfully, and for those of you who have had the opportunity to benefit from the solutions that we have on offer today, will notice the results that we are delivering. So how is it being used? How is all of these fintech services being used? Well, predominantly everyone's looking for ease and convenience. The relative ease in setting up an account was overwhelmingly cited by respondents of the latest Ernst & Young Adoption Index survey as a top reason for using fintech. People are looking for more attractive rates, access to different products, services, and better online experiences. And this was also highlighted as some of the key aspects of what people were looking for when utilising fintech products and services. And it drives the adoption rates as a result. Payments also have led the way as the most popular fintech service adopted, making up 18% of consumers surveyed by Ernst & Young, and then running a close second with savings and investments at 17%. Online insurance services and peer-to-peer lending were less popular at 8 to 6% respectively, but growing. And as demand for cross-border payments continues to grow around the world, it's realistic to expect that even more people will continue to look at fintech and to take the lead and provide innovative and cost-effective solutions. So once again, while many traditional providers are grappling with how to replace cumbersome, outdated and time-consuming account establishment forms and processes, fintechs are enabling customers to set up services with as little as one click. But is all of this working? What's working? And what's still to come? Well, being in this space, we've actually got some results as a result of, since 2009, working with providers, employers and employees. And what we find is that the right solutions encourage change. And so we have been very much, our sweet spot has been very much focusing on technology and data innovations. And what we've seen that it's helped transform almost every department of the modern enterprise that we work with. But HR departments have not had access to this data and technology in the past. That could have helped them with meaningfully understand their workforce and what strategies and programs they need to drive success for their organisations. Hence, Hello Wallet is a company and similar companies to us that brings the power of modern technology and data insight to help organisations align program spend with employee needs whilst driving positive behaviour change. We find the financial health of workers improves over time as they use our application, improving benefit efficacy, alignment and reducing costs for the employer, while savings rates improve by the largest margin, but there are broad improvements in every financial area of members' lives. We also find that younger and lower income workers, as we showed on the previous slide through the Ernst & Young research, but this is our research, are able to change their finances most swiftly. But over time, middle-aged and higher income workers are able to sustain the largest improvements of their financial health and the other outcomes sought by employer sponsors of financial wellness programs. So in this slide, the median Hello Wallet member increases their overall deferrals by 11% after 6 months, 33% after 1 year. Then over a similar time period, the median monthly retirement savings deferrals increased by 11% after 6 months and 12% after 1 year. And then all age and income groups increased their savings rate during the study, but the changes were highest among the near retirement age group and among lower and lower middle income workers. When it comes to reducing debt, the median Hello Wallet member decreases their overall debt by 8% after 6 months of use and 11% after 1 year of use. Either way, regardless what these numbers are, these solutions are moving the needle. These solutions are helping change behaviours for the better. These solutions are becoming a conscious and a catalyst, both proactive and reactive, to get people to take action. And the bottom line, employers are adopting financial wellness programs, as I mentioned earlier in the piece, to improve the efficacy of their existing business investments, drive stronger alignment between their benefit spend and the needs of their company and workforce, reduce human capital costs, and strengthen the business impact of compensation and benefits. We have seen so much change in this industry, in this market since 2009, and more so in the last 2 years. But it's also important to work out, when choosing a solution, what is the right solution? And today, because there are so many FinTech financial wellness solutions in particular out there, you as employers or as employees or as customers or for yourselves, when evaluate a program, we've really come up with 6 key questions that you need to consider. And the first one starts, well, how are you going to deliver financial wellness to your employee population? Is it an online software solution? Is it group meetings? Is it by way of content? Is it advisor one-on-ones? Is it print materials, phone consultations? Can we cater for multi-locations and scalability? Those are very crucial questions that need to be asked, and we find success when those questions are asked. The next point that you need to consider are technical features. The world we live in today, as I mentioned earlier, it needs to be easy, it needs to be convenient. So automatic aggregation of multiple accounts is one area that many employers look for. Mobile web application accessibility, push communications to nudge people along, continuous calls to actions, potential integration with record keepers, incentive providers, and health benefits platforms. Thirdly, behaviour modification versus education. Is general education better than application of behavioural science principles? Getting personalised messaging based on behaviour and tracking engagement success, is that better? Fourthly, reporting. Are you looking to measure changes in behaviour that you can report to your executive? What do you want? Need to know. Does the solution have reporting? Does the solution provide statistics? Next, conflict of interest. Hello Wallet provides personalised financial guidance. Other solutions go beyond that to provide investment advice. There's fiduciary requirements. What about unintentional employer endorsement? Cross-selling. Do they want the employee's business by selling products within that solution? And last but not least, payment method. Are you going to pay for it as an employer? Is the employee going to pay for it? The hybrid between employer paid and employee subsidized. Are you going to use forfeitures, ERISA credits via retirement plans? Caution, consider legal opinions. Or are you going to use health plans? I mean, outside of all of this, other considerations, you've got to look at the reputation of a provider. Who's been in the market the longest? Who's had experiences across a whole centralized and decentralized populations, and the track record and the experience that they provide.
It looks like we have a couple of questions on the line. Do you mind taking a quick break for one of those?
Yeah, for sure.
Great. So, good question coming through on FinTech. Do you see FinTech continue to grow out of startups or traditional banks taking over this space with new technology investments?
I think it'll be a mixture of both. So there's plenty of new startups incorporating day in, day out. Banks, too, are looking at the proposition of whether they build or whether they buy. So it's going to be a little bit of a hybrid. And so, but for the short term, we saw even just this week alone, 4 new startups in the FinTech space launched. So the numbers are still growing high. In the financial wellness space alone, last year there were 10 new providers. And then when talking to actual institutions, banks, providers, through our day-to-day conversations, many of them are trying to decide whether they do acquire because it saves time when it comes to coming to the market, or whether they simply put a roadmap in place and build. So I believe it's a hybrid. We're still going to see in the next couple of years still a lot of startups that are coming to play, and we're going to see a lot of acquisitions coming our way as well.
Awesome. And one more that we've gotten a couple of times as well, in terms of solutions for small plans. So sometimes there is certain size that a company might need to be to have access to different fintech or financial wellness solutions. Any kind of specific strategies or products that you might recommend on the smaller end of the market?
Yeah, that's a great question. And actually, we've seen a lot of pressure in recent times because our sweet spot was really for the mid-market or bigger companies in the marketplace, in the Fortune 500 space. So we've actually reworked our solution to create a core solution, still getting a SaaS, software as a service solution, but to cater for the smaller market, to making it more accessible. I know from a Hello Wallet perspective, we're seeing more demand by smaller plans that are looking for this, and from competitors are also launching a lot more SMB, smaller, medium mid-market type business solutions out there. So you'll see more coming your way. Ask the same questions as what a bigger player would ask for smaller, would ask providers such as Hello Wallet. Those questions that I showed you on the previous slide are still valid whether you're an employer of 500 employees or whether you've got 20,000 employees. So hopefully that helps.
Awesome. And then maybe just one more, and then I'll let you dive back into the slides here. In terms of trust in banking and fintech, how do we help people that might not be trusting technology get into using financial wellness technology? Do you think that maybe having the employer's stamp of approval helps, or anything you can comment on with regard to trust?
Yeah, and that's also a great question. So from a Hello Wallet perspective, again, I'm talking about a live example. Privacy and security of information is paramount. And so when we were a startup, we actually spent a lot more money on security that we needed to, but we needed to provide trust to plan sponsors as well as employees. It's important that when you're working with a plan or a financial wellness provider that you do ask to do the security audits and reviews. Our security reviews, we've passed everyone since Hello Wallet has started, and we have a security packet that talks about the importance of that to give comfort to the plan sponsor, to the executive team. So when you're recommending Hello Wallet, you can actually say that you have gone through a stringent security review. Then what we do as well, from a Hello Wallet perspective, I'm only talking about, is we do not collect anything personally identifiable about that employee. We don't collect social security numbers. We don't collect credit card numbers. We have read-only access, and the terms and conditions that you should be reviewing as well are in plain English, and it's an opt-in rather than an opt-out. So, and through the communications program that providers should deliver, as we deliver, is about educating and providing a guided discovery to your employees so that they feel that comfort when they're clicking that button to register and join. Then the third part to this is that we do not keep that information on file. If the individual decides to delete their account, we do not store that information in our databases. That account is scrapped and deleted completely. So having security protocols, asking the security questions so that you as plan sponsors feel confident in relaying that back to your employees, and having plain terms and conditions and allowing employees to opt in rather than having to opt out, all gives a sense of trust, privacy, security, and we've had really great success by doing that approach.
Fantastic. Thanks. And we've got a couple other good ones here, but we'll save a few for the end as well.
Brilliant. Thank you, Lacey.
Sure.
So now what I want to touch on, so what's still to come? And it's an exciting industry. And with the advent of technology, we've seen men on the moon, self-driving cars, we've seen the rise of artificial intelligence. All of that's exciting, but not all too relevant to the average person's day-to-day life. However, coinciding with technology's advancements of 2017 is a FinTech golden age with the power to change individuals' personal finances. In our digital age, billions of people will join the online community for years to come. Therefore, we'll continue to seek a quick response from FinTech entrepreneurs offering innovative solutions to both consumers and businesses. So looking at how recent successes in technology have paved a new landscape for finance, we see that the future may bring services such as enhanced financial education, investment advice, better payments processing, and smarter compliance to the public. So, some of the predictions, the following 5 growth areas are what we see really coming home in 2017. Firstly, and this is what Hello Wallet's been part of since 2009 actually, the democratization of access to finance, to personalized financial guidance. Hello Wallet has been a proof of that democratization. Another example of this is Investopedia. You might be using it daily. It's a proof of democratization of finance. It offers free access to a wealth of easy to digest knowledge and tools with a widespread use of internet. Average people have now this immense financial knowledge at their fingertips. So in 2017 and forward, entrepreneurs will provide platforms by which consumers can track their spending and optimize their investment strategies as well. And so I found a quote by the CEO of robo-advisor Betterment, John Stein, who tweeted, "We'll see the beginning of the end of a retirement crisis with greater access to advice via low-cost services and better 401ks." So this is just one area that's still to come and still to be enhanced. We're going to see the facilitation and ease of and safe mechanisms to spending. Now, this point may not always be positive for the consumer. Easier payments sometimes mean frivolous spending, but it can also translate into a convenience that saves time and therefore money. So as consumers, we want our shopping experience to be quick, painless, safe. But then with identity theft on the rise, online shoppers are more skeptical of their virtual transactions. So here's some examples. Startups such as payment company Stripe, and we use Stripe for a Hello Wallet B2C experience, have helped Apple, Twitter, and Facebook launch e-commerce by dealing with the multitude of issues that arise with online payment processing. Stripe congregates and simplifies billing, reduces or prevents fraud, currency conversions are made a lot easier, and other services on a single platform. Compliance, it's a dirty word. We all hate it, but along with the technology boom of the 21st century comes a widespread increase in regulation. Compliance is costly for both the business and individuals, and furthermore, transaction processing technology and software pose threats to security standards. So we're seeing new FinTech startups are trying to integrate those two aspects so that companies can continue to grow online whilst without breaking the law. For example, the online identification verification leader Trulio announced, even going back in 2015, $15 million they raised, which was the largest FinTech equity financing round of that year, because there were more and more investors that showed that this was a promising solution. The startup aims to improve trust and safety online, focusing on compliance and fraud risk mitigation in the fast-growing cross-border payment industry that is very common in our media. Fourth, investing your money. And Morningstar knows a lot about this, Hello Wallet knows a lot about it, and I believe all of you on the phone today know a lot about the importance of investing your money. Robo-advisors are only going to increase in relevance and abundance in 2017. Investing is a lucrative endeavour that's no longer reserved for the rich. Instead, the market will reward those who invest wisely, regardless of their financial history. There will be fewer minimums and costs going forward, while the realm of investment opportunities will open up and offer complex products up to the layperson. You'll notice the quality of services will increase with more competition in the industry and greater demand for those services. For example, you probably see it in the media, the robo-advisor Wealthfront aims to replace traditional wealth advisors altogether by personalising, diversifying and rebalancing low-fee individual IRAs, both IRAs and 401k rollover accounts, etc. Other platforms such as Acorns aim to inspire investment in novice investors by showing how fruitful it can be to invest spare change in stocks and mutual funds. Oh, and don't forget, arguably the first ever robo-advisor available, and now close to 20 years, is Morningstar's managed accounts and a wealth forecasting engine. And if you haven't had a chance to check that out, visit our website or the Morningstar.com website, and you can learn a bit more about what we do in that space also. Fifth, new loan opportunities. Well, with the same theme of facilitating and democratizing access, online loan platforms are helping to offer up completely new ways for individuals to get loans. In the past, financing for small businesses and consumers has been hard for those with past lending problems or a lack of capital. So now these groups are granted access to loans through alternative lending. And the proof of success of these startups is the entrance of investment banks into the online lending space. You may have read in the media last year the partnerships of JP Morgan and On Deck Capital, in which the two will work together to originate, underwrite, and issue loans directly to small businesses. But wait, there's more. Other platforms get creative as well, such as SoFi, which helps refinance student loans, which is a big issue here in the States, and mortgages. You've got Lending Club, which allows peer-to-peer lending. So I've thrown a lot at you in a short period of time, and if you are very interested in learning more about what we spoke about today, there's going to be a blog post come out and a recording of my webinar. But there's also, at Hello Wallet, our research team is constantly analysing the latest data of retirement and healthcare and spending behaviour so that we can uncover the latest trends and deepen our understanding in this space. So we use our findings to better our products and share our insights with you through numerous research papers at the hellowallet.com website, webinars and white papers. And following today's seminar, as I mentioned, you'll receive an email when the recording of this webinar is available, and also a link to the blog post summarising what we discussed. And apart from accessing this information from our website, feel free to send me an email. My email address is up on the screen here if you have any additional questions. And we'll also, because we've still got a few minutes left, we also will have the opportunity to answer some of the questions that you forwarded to us through the chat function. So once again, thank you very much for your time today. And if you have any questions, feel free to reach out to us. Many thanks.
Great. Thank you, Andrew. I can tell you're passionate about the topic and very knowledgeable. So appreciate all of the insights, and we've got a few questions. So if you've still got some energy left, shall we dive into those? All right. Interesting question coming through here about robo-advice versus humans and kind of that advisor interaction. So would you say Morningstar, or perhaps even your personal opinion, is that 100% pro robo-advice, or do you think maybe a hybrid approach is more likely to succeed, where you've got both that individual advice but also the technology component?
Yeah, so thanks, Stacey. So this will be my personal opinion. I want to have a job on Monday. I believe it's a hybrid approach. You won't fully replace the need for advisors. It's and the company that I worked for previously, Grosvenor, our catchphrase were advisors were our business. We use investment advisors, and this whole robo-advice space, we did a lot of research about that. Our founder, Joe Mansueto, actually wrote a paper, and there's research on the Morningstar.com site of his opinion, and really it came down to a hybrid approach. It's different horses for different courses. Not everybody relates well to a digital solution. It depends on which generation you're in, depends on how tech savvy you are. So my personal opinion is that there will always be a place for advisors. Obviously, there aren't enough advisors to be able to support the market that we live in today. I know Morningstar, we make up 28% of the advisor segment here in the United States uses Morningstar, but there just aren't enough advisors to be able to help everyone. So a hybrid approach will definitely be the way that I see moving forward.
Great. And in terms of, somebody's asking here about exciting FinTech solutions upcoming from Morningstar. I know we've got a couple of mobile teams in particular and folks iterating on some of our .com research. I know we've got My Company Stock was recently released into the App Store if people want to follow their own company stock. Any other kind of FinTech things brewing or that come to mind for you from Morningstar?
Yeah, so again, being on that more of a Hello Wallet space, we're an agile shop, shall we say. So we're continuously looking at improving on the solutions that we have. We're looking at tools that more recently we launched features within our application as well in relation to guidance and focusing a lot more on the millennials market to help choose what is the appropriate prioritization for goals versus your debt levels and versus building emergency savings. You would have seen in the Hello Wallets and Morningstar announcements our student loan white papers and some calculators and tools that have been developed to be able to assist in that area. Then from the creativity of the innovation that we have at Morningstar and Hello Wallet, in the retirement space, our Plan Advantage solution to simplify and make creating lineups for in this fiduciary world of ours, in particular from 1 April next year, a lot more easier for plan sponsors and fiduciaries to run plans and design plans. We've created solutions around that and platforms around that. So there's a lot that we're working on currently, and we're happy if you have any further questions or you would like some demos of some of the solutions that we're providing. Please feel free to reach out to myself, and either myself or one of my many team members will be able to contact you to provide you a deeper dive into what's coming up in 2017.
Great. I know we've got a recently redone 14th floor on Morningstar too, so investing in technology recruiting has been a big initiative for us recently, and we've got some really nice new space in Chicago where we're bringing in new tech talent, and this space really looks the part as well. So that's something to add additionally. All right, a couple more quick ones here. In terms of measurable monetary impacts to the employer from the benefits of these programs to employees, I know we talked a little bit about ROI, which probably has evolved as well, and kind of different perspectives on that with regard to wellness. What are you hearing most recently, and what are employers asking for?
Yeah, thanks once again, Lacey. Yes, it's very difficult to have a specific ROI. We've tried various ROI calculations over the years and failed miserably because it's in the eye of a beholder. We typically, when we look at what our competitors are doing and what we're doing in particular, is we look at three key metrics. We look at adoption, engagement, but more importantly, the impact and the insights that we're getting as a result of individuals signing up with these digital solutions, engaging with these solutions, and then we're starting to see the behavioral change. And because when you're looking at these solutions, and I was talking about the difference between education and behavioral modification, is we're looking at how we use push notifications, we use nudges, we use customization of messaging to get people to engage with the solution. So firstly, we need to encourage them to sign up. If you don't get people to sign up, well, you already are losing the battle. Now we've got them signed up. The next step that we need to measure is how they're engaging with solutions like Hello Wallet. So Hello Wallet, we use, as I mentioned, push notifications, text messages, emails, which act as both proactive and reactive to what's happening in their personal situation. We've used a measuring or a measurement tool, which is our proprietary financial wellness score, which has 8 categories, starting from a basic spend less than you earn, right up to home equity, saving for retirement, building up emergency savings. and that really engages with individuals. So you need to have those engagement tools. And so then later on, when you've got those measurements, you've got something to report back to the employer. And my experience is if you put a program in place and say, hey, we want to increase our deferral rates by 4%, hey, we want to reduce debt levels by this and have a specific number, there won't be one program that will be able to give you those specifics. They may use that in their marketing collateral to say that, but it's about looking at how the interaction and the activities that your employees or participants, how they are engaging with the solution, and looking at, so when they do adopt, what are we doing, what campaigns do you provide, and how you're engaging with them so that they will keep using the solution. So then you can only see what the outcome is, and you can only see if you're starting to move a needle. So we quite often, when we have employers who work with us or plan sponsors, they say we have 28% leakage from our retirement plan. And a lot of it is because they don't have emergency savings accounts, so they're living paycheck to paycheck. So one of the recommendations or guidance pieces that we have is establishing an emergency savings account. Then we're able to report to show how many, through the communications, through the campaigns that we offer, through the tool that we have available, have now taken up emergency savings. And then through the metrics and the analytics we get, we can see, are they using revolving credit card debt, or are they using their 401k account balances to pay for any unexpected expenses they may have. So we can get down into the devils of the details. We can get down to those details by looking at what they are doing within those accounts that we're providing holistic information about. But if you're looking for a black or white ROI, it is very complex. We can provide trends, we can provide insights, we can provide adoption and engagement. And if you find providers who are saying counter to this, that they can give you a specific change, monetary change, that I would like to sit down and talk with them. So thank you.
Great. And maybe one final question here for you, and everybody can have a few minutes of their day back. I think might be nice to end on a great question here, just about tying together kind of a holistic wellness solution. So oftentimes we hear maybe financial wellness is one pillar in the comprehensive program. Maybe you could just comment as a final comment on how you are seeing employers go about that holistic wellness approach.
Yeah, a great question. So the pendulum has swung the other way from when I started at Morningstar Hello Wallet 2 years ago. When we first started talking to plan sponsors and employers, they're going, oh, we can't do this. This is too paternalistic. It's almost gone the other way now that employers are sensing that this is an important consideration. It's an important benefit to put in place for their employees. So originally it was very much a standalone type solution. Hey, we maybe want to improve our retirement readiness. Now they're looking at their entire voluntary benefit strategy and look at how does financial wellness fit in the whole of their wellness strategy. So employers and plan sponsors are now looking beyond retirement decisions. They're looking at putting the 3 pillars of wellness in place: physical, emotional, and financial. They're looking at how solutions like Hello Wallet can plug and play with regards to that strategy. They're looking at how we work with not only record keepers, but how we work with health benefits platforms, so with incentive providers. So there was a lot of, shall we say, window shopping and a lot of gathering information the last few years. Employers and plan sponsors are now taking it a step further, where they're starting to evaluate the marketplace, they're starting to devise their strategy, they're starting to put requests for proposals or tenders in place, and they're starting to partner up with, whether it be wellness providers or employ wellness specialists within their organisations. So that's how the pendulum has now moved and swung the other way over the last 2 years. It is very much around health and not just wealth.
Great. I think that's a nice note to end on, and we'll give everybody a couple of minutes back here. And Please feel free to send in any feedback you have or questions you have. You can direct them toward Andrew, and we'll follow up with materials from today as well. Hope everybody has a great afternoon. Thanks so much.
Thank you all.